Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's November 21st. This will be our chart lesson for today. And a couple of things. Thanksgiving holidays coming up Thursday and Friday. I think the markets are open till noon or something both times. Don't try to trade that stuff. It's not worth it. A lot of times you'll get trapped in a trade, and prices won't move enough to even get you out of the trade. So don't try trading that stuff. Just take the holidays off, enjoy them. Um, I'm actually going to take Wednesday off as well, so I'll be here today and tomorrow, and then I'll be out Wednesday, Thursday, and Friday for the holiday, and be back the following Monday or whatever. Um, but anyway, let's take a look at today's chart. You can see this is the daily chart with the envelope bands. You can see we're just working sideways to slightly down, and we've worked off some of the overbought. We're still in the upper side of this, so I would expect us to prices. I mean, we could turn higher here. I would think this is probably our target, but I mean, this is just looks like consolidation after a big move up. So we could make that next run up, or we could even turn down. It's just hard to say. I mean, this is just mixed trading, congestion, whatever you want to call it, sideways. And I mean, we've had one, two, three, four, five, six, seven, over a week of this. So uh, it's just hard to say what's probably going to happen here. Um, maybe we've made a bottom down here. I wouldn't hold my breath on that. It's possible, but we'll just have to see. I mean, it looks like this channel is played out here. So we do have a break and a move to a new high. Maybe we get a second leg up here after a little consolidation. Maybe it runs up to the trend line. Maybe we just sell off again. So it's just there's nothing here that really gives us any strong clues other than you can see we've been in this downtrend, and I don't see any reason to consider this is over yet. Um, maybe it is. Maybe it's not. I don't. It's just hard to say. So there's a real wide look at it. You can clearly see that this entire contract's been in a downtrend, and we're a good bit off the lows, but doesn't mean we can't turn and go lower again. It doesn't mean that we're done to the upside. We may come back and test the trend line again. So anyway, let's you can see what the day looks like here. Another bearish to neutral kind of day. We closed down from the previous day. Obviously this was Friday, I guess. We closed up from the lows of the previous day. We closed way off the lows. We traded extremely low and closed way off the lows, but we still closed downward from the previous day there. So we're working down, very, not very strongly, but we're working down there. But anyway, let's flip over to the 2000 tick chart. We'll go through today's trades and we'll take a look at it. And you can kind of see it's pretty much a range day. But let's flip over. And here's that chart. You can see that it's mostly sideways here. And we kind of closed near the center of this. We did break lower a couple of times, but they couldn't. I mean, none of those, neither one of those break lowers followed through. They all failed. And just like most of the time they will, even if these breakouts are usually fail at least temporarily at the very minimum, but they normally will fail, and a lot of times they'll fail and come back into the range again, which they did today. So we recovered a little bit after this failed break lower here, but we sold off some from there and just kind of chopped sideways from that point on. So um, anyway, not a lot of trades today. There's not much happening down here. This is pretty hard to trade. I don't see anything I really like down here to go long or anything except for this possible trade here, which we'll talk about when we get to it. But let's zoom in, work through the trades, and we'll wrap the day up. So 7 o'clock came just as we came off this low and just kind of were chopping sideways before we shot up here. So 7 o'clock comes right in here. And then notice we try to go short once, twice, three times. But you also got a first entry, second entry. This is more of a little range here than anything. And this signal bar is not really great. If you it did break lower first and turn up, and because that's a range, you would expect prices to go back to the upper side or to test the highs. So you might trade that on the engulfing bar, but if you didn't enter on the engulfing bar, I don't think I would enter here. There's too much stem at the top here. This looks like a failure to go higher. It ends up going higher, but if you're looking at that at the far right hand side of your chart, that doesn't look too promising. So I wouldn't take that. I would wait and see, and then of course it comes back and it gives another test of this low, and it gives after a breakout to the high side, and gives you another test with a relatively bullish bar. I'd rather enter there, and that's a pretty nice move up. And of course you got your break, move to a new high, and you got this little 2-bar matching high, and it breaks higher and fails instantly and turns down. I like going short. I mean, look how far away we are from the EMA. Prices should snap back to that pretty quickly. And, occasionally this thing can go higher. But because of the little 2-bar matching high, I tend to like that one as a trap. And you can see it definitely traps people how quick it drops. And we get a little close outside here. This one never really comes back. I may not quite have this drawn right. It's probably more like that. And so we probably do get a close outside and a new low there before we go higher. I think I just had it off a little bit there. So it doesn't really change anything other than this reversal. And I don't see a trade I like there anyway. So I don't think it really changes anything from the way I had it drawn. But we move up, close outside, new high. You get a first entry and it just turns down. You can't go short there. And drops on down. Then you suddenly get a second entry here. I marked this one green. I have a little bit of a concern with it because we're not quite back to the key entry point. But it's such a bearish bar. It is the second entry. Everything is below the EMA. You may take that trade. There's still plenty of room to get out. So maybe you take that trade. But even if you don't, you actually push lower, and then a few minutes later you get a second entry short with another nice signal bar right at the key entry point, and then look at it take off. Sometimes it's best just to follow the rules and take the easy, simple, sure things, and there it is. Wait on those. Again, this one would have worked. I probably would take that trade myself, but it's definitely aggressive. And if you're a new trader, maybe you wait on something definitely off the key entry point, because sometimes you'll get tripped up going short too early here. So it all depends on the overall context of the chart and your ability to read it. So just because I marked it green doesn't mean you would trade it as green or even trade it at all. So just keep that in mind. That's the beauty of our strategy, is that it's not mechanical. We're chart readers, and so a lot of it depends on our ability to read the chart. And then the patterns, we just only use them to time our entry and our entry price. So if you just trade every second entry you see, they're pretty powerful entry, and so you'll probably get it right most of the time, but you're going to have some failures if you just trade second entries. The key is to trade second entries in the right direction at the right time at the right location. And once you learn to spot those, then it becomes much easier, and your win percentage becomes much better. But here we go again. We bounce off the lows. We try to go higher twice. It fails. Right at the key entry, or right at the EMA. Once again, it doesn't quite get back to the EMA. But we saw that once before, and this is a little bit of a range. So the key is, do you have enough room to scalp out here? And if you just look at the closes, you don't. If you look at the low, you do. So again, it's a little bit aggressive, and so you need to think real hard about that one. And of course, it ends up just chopping sideways, but it's an easy scalp all the same. Somebody asked me today, is there a reason we only go for 4 ticks? And certainly there's a rhyme and reason behind it. It's because we found that's the sweet spot that you're gonna, if you want to get up to 90% win rate or better, you scalp out at 4 ticks. Because if you start trying to get an extra tick or two, or even extra 4 ticks, which in some cases it's possible, very possible, but your win percentage is going to drop. And so, is it, do you want a high win percentage and a very few losses, or do you want to try to get more out of your trade and be more of a swing trader? It's up to you and what you're willing to do. But yes, there's definitely a reason we go for 4 ticks. So unless you're wanting to try to be more of a swing trader, I don't recommend changing that. Now, if the volatility is super large and you have really big bars and you're having to get much bigger stops, then maybe on those days you go for more. So, but I don't see that right through here. This looks too, none of these bars are exceptionally big. 13 ticks, 14. These are, these are relatively 12 ticks. But when you get those days where they're 30 and 40 tick bars, then yeah, maybe you go for more, because your stop's going to be a whole lot bigger, because your stop always goes 1 tick above the signal bar or 1 tick below the signal bar if you're going long. And you can't put it anywhere else. If you do, you're going to get stopped out on perfectly good trades, so don't try it. But anyway, we just continue to chop sideways. We drop lower. We continue to chop sideways, and of course it fails. Unfortunately, I don't see a long here. You might say this is a reversal, but you've already got a close outside. There's not very much room to the highs, and it could just tick up there and turn down. I just skip that. And notice we do get a break and a couple of swings up, and then we turn down. And I don't like going short there either, really, because we're still working higher. So it's not necessarily a place I think it's safe to go short. We just came off the lows on the failed breakout. There's high odds we could continue to work higher here, but it actually turns down, bounces. We bounce across here. This is not rejection. Notice how we're not taking off. It looks like it probably still would have worked, but I don't think it's worth risking it there. And the next thing you know, you're rocketing down. They trapped a bunch of longs in there, and then boom. And all these people got punished for getting long there. Unless if you just scalped out, you might have survived. But if you tried anything more, which a lot of people are swing trading and long-term trading, they just got stopped out. And that's why they all start exiting right here. And that ran it down. You can tell that's a trap. And of course that breakout fails too, and it comes back. Now I didn't mark this trade because it's an engulfing bar. But you might have traded this. I actually think it broke higher and turned back down and then came back up. I wouldn't swear to that. If it broke lower and came back up and then broke out, maybe you trade that trade on the engulfing bar. I wouldn't wait till here to go long, because it's right back into the support resistance, and it could act as resistance and turn back down. So I would skip this one. So then of course we get the close outside, new high, and then we're bouncing here. Now I do like this one because you got a double test, and it's holding there both times. I would have liked this better if it closed above the EMA, but you can see when you're sideways here, the EMA, you can't worry about it. You're more worried about the support and resistance. And this looks a little sideways, so, and there's plenty of room back to the high, even this first swing, but this would be more of the highs up here on this little, I didn't mark it, but there's somewhat of congestion there. And it fails out the top, fails out the bottom, and then gets back inside there and goes higher. Continues up. So I tend to like that one. And it fails on a breakout, and it tries to go higher once, twice, and you're still way away from the EMA when this breaks higher. So if it turns back down, I would want to go short there. And you might trade that one on the engulfing, although it's a little bit congested. So you probably want to wait and make sure this closes bearish. So if it breaks below that, we're probably at least coming back to here to test this. And it may get back inside the range. And you can see it tried to bounce there, but it wanted to come a little bit lower. And it tests the low side of the range and then rockets back up again. I didn't mark this one. It's a little bit high. It doesn't really look like a triple test. If you saw it as a triple test, maybe you think, hey, I want to take this because it's a triple test, but I don't think there's enough room to get out either. So that's the other problem. It's only 5 ticks there. So if it got stuck there at the resistance, then you're going to lose out. So I don't think you can risk that one. It's not. It's really not a triple test. It's close. And if there were some other things in place and a few other setups, then maybe you take it. If it was a second entry and it was a clear triple test and that kind of thing, maybe you take it. But I just don't see that there. And runs up, and then we're just working sideways. Nothing in there. Breaks out. This one's tempting, but I'd wait on it, see if you get a reversal, which you don't. But of course, draw your trend line there, and then finally, notice you make a new low there, and you get a first entry, and then a second entry right at the key entry point. It's a decent signal bar. It's not great, but that's all you need on a second entry with the trend. And look at it go. Boom, easy move. And then it's just working sideways again. And I don't see anything short or long there that I really like. You might have looked at this as a failed second entry long, but we just came off the lows. You would expect prices to go back to the highs. It's a little bit sideways. All those bars stacked up. I'd just skip it. I don't see any other longs or shorts in there until it fails. And unfortunately, you don't get if you'd got a nice signal bar down here, maybe you could trade that back, but you don't even get it. And that takes us into 230. Not a lot of trades today. The volume's down. I think the holidays already started for a lot of traders. Probably a lot of the institutional traders might be off all week, and they're probably it's probably going to be a slow week, and tomorrow might not be any better. It's probably going to get slower as we get into the week. And again, don't try to trade Thursday and Friday. Not live anyway. If you want to sim trade it, that's one thing, but don't trade it live. If you do, you're just asking for trouble. So I highly recommend you don't try to trade it live. And if you're not a winning trader and a skilled chart reader, shouldn't be trading live anyway. People never listen to me, but I'm going to keep saying it. Wait till you can double a sim $10,000 sim account trading exactly like you do when you go live. If you can only trade one contract when you go live, then when you're sim trading, you need to be trading one contract. And if you can trade 5 and you can handle that kind of pressure, I think that's too much pressure to try to start live though. So I think you need to start with 1 or 2 contracts trading live, because the more leverage you get and the more with every tick that moves against you, the bigger it is, the more pressure it puts on you mentally. And a lot of what we do is mental. So this is not get rich quick scheme. This is a way to extract a daily salary, and over time you will get rich. But don't look at it like a get rich quick scheme. Look at it like you're coming in to a job and you're working every day and you're going to extract a salary that's within reasonable based on your skill set. And if you're new to this, that's maybe 1 or 2 contracts. And even then, you're probably not ready. You think you are, but you're not. And you'll think that a couple of times before you're ready. But when you can come in and you can play by the rules the way we teach them, trading 1 or 2 contracts, and you can double a 10K account, then you're probably ready to test the waters live. But don't go to the ES, go to the MES and trade 1 or 2 contracts there, and try to double maybe $1,000 account. And when you can do that, then you know you can do this, because if you can do it in that live with the MES, then you can do it live with the ES. Doesn't mean you'll be able to, because the leverage might be bigger and it might mess with you mentally, but you know you can do it if you can get your mind right at that point. And that's the most important. Proving you can do this. So that's the first step is on sim. Proving you can do it by just knowing the strategy, and it'll be easier, yes. And a lot of people say, but it's not the same as trading live. No, it's not. But you can't afford to learn to trade live when you don't know what you're doing. So you need to sim trade until you learn the basics. And once you learn the basics, then just try to double that account, because you can't afford to do it trading live. And so many people just don't listen. They're eager. If you want, what you got to ask yourself, are you doing this because you want to make money? Or are you doing this because you like the thrill of trading? And if you can't if you're too antsy to trade sim because it's not real money, then you're probably trading because you like the thrill of gambling. And if that's the case, go to the casino. Take your money and go to the casino because you'll have better odds. Go play blackjack. I think that's the best odds at the casino, unless there's something new that they've come up with. I mean, I don't go to the casino. I'm not really a gambler, although I know a little bit about blackjack, and I have been to the casino before, and I've always heard that's the best odds. I think the house only has a 1 or 1.5% advantage on you there, so that's your best chance to win if you like the thrill of gambling. Go to the casino. Get out, play blackjack. If you want to make money, then you need to get rid of that idea of the thrill of trading and the gambling because you're not going to make it. Gamblers do not make it in this business. Not if they come in here with a gambler's mentality. You got to trade. You got to do this totally different than a gambler's. Sure, one advantage you might have is a gambler. If you're a professional gambler, when you come in here, is you might not have as much mental stress from the fact that your real money's on the line. But other than that, I would say that's the only real benefit of being a gambler, of coming into trading, because you're going to have so many things you're going to try to do in trading that aren't going to work, they just don't transfer over from gambling. Not in my opinion, it doesn't do it. Other than the fact that you have veins of steel or whatever because you're used to putting your money on the line and losing it and winning, and that part doesn't bother you because that is a mental aspect of trading that you have to get past. But the thing is, we expect to win, so winning doesn't get us excited. And because of the nature of what we do, you're going to have some losses, so a loss doesn't bother you. A good trader, a loss just means he's probably going to have 8 or 10 in a row on the next few trades because he knows his odds are whatever his trading odds. If he's trading at 90%, he knows the next 9 or 10 trades are going to be winners if he has a loser. He doesn't worry about it. But a new trader has a loss, and he goes, oh my gosh, I got to get that back. And then he starts revenge trading. Next thing you know, he's lost 2 trades, and he's really worried now. I got to get that back. And he can't trade fast enough. He can't find another trade fast enough to try to get that money back. And then he's had 3 losses. Or then he takes another trade and he gets down. He says, I'm either going, this is it. I'm going to sit on this. It's either going to come back or I'm going to get blown out, and that's it for me. And most of the time you get blown out because that's what happens when you revenge trade. So you can't do that. You got to be able to take a loss, and early on, if you take a loss, get up and walk away at least 15 minutes before you trade again. Go out and walk around the block. Go pet your dog. Take your dog for a walk. Go play with your kids for a minute if you're at home and have kids. Do something to take your mind completely off trading for 15 or 20 minutes. Then come back refreshed and trade following the rules and waiting and using discipline. And if it takes another 30 minutes to find that winning trade, wait on it. If you can do that, you will save yourself a lot of headache and a lot more losses, because one loss brings on a second loss to most amateurs. And then a second loss brings on a third loss or a blown account after that. And I've seen it happen over and over. And it happened to me. I did the same thing. I had to learn the hard way. So trust me, I know what I'm talking about when I tell you those that don't trade after a loss if it shakes you up a little bit. Well, get up and walk away. Eventually you'll get to where you know that you trust yourself and you trust your reads, and because you've proven it over time. You have to prove it over time. And that takes a lot of time. This is a skill. And the only way to improve this skill is to come in here and do it every day, and it's through study, hard work, and repetition. So you got to keep working at it. But anyway, didn't mean to get off on that tangent, but it's probably something somebody needed to hear, and it's probably something many of you need to hear. But some of you will listen, and some of you won't, and some of you will go on to succeed at this, and others won't, because they don't listen. They think they're a little smarter, or they're a little more lucky, or they're a little better than the other guy. And trust me, the smarter you are, the harder this gets, because prices do not move based on common sense. Some of the quickest and best traders I've ever seen are the ones that come in here that have never traded before. They don't think they're super intelligent. They're just average people, and They've never traded before. They don't know anything about trading. They hadn't read all the crazy wrong stuff that's posted all over the internet and in all these books and all these courses. They come in, they buy our course or they study our course and they figure out what to do and they go do it. And they don't ask questions. They don't argue with it. They don't try to mix in the stuff they learned in the past. And they don't try to mix their own ideas in it. And they have success because they follow the formula. And they don't buck the trend. So if you want to succeed at this, follow the proven formula. It's as simple as that. And no, that's not simple to do, but it really is that simple. This is not rocket science, but you have to understand and learn price movements, and they're not based on common sense in any way. And if you use your common sense, you'll get chopped to pieces. That's why most people fail, because they're a lot of high IQ people that are highly intelligent, that have good, where your common sense has served you well over the years. You've reinforced that, so you trust it. And you come in here and you're using it on trading, and it's just chopping you up, and it's hurting you. But it's hard to understand that because it's served you so well in the past, and because your intelligence has served you well, where it would work against you in trading. I hope that makes sense. It's kind of hard to explain that, but it's really because trading and price action, price movements go completely against common sense. Totally. And if you use your common sense, you're going to get messed up. So what you need to be able to do is use your extra intelligence to follow rules and can revert yourself back to first grade and say, I'm just going to follow the rules, and I'm not putting my own thought in here. I'm not putting what I learned over here at Joe Blow's course, or what I read over here in this forum, or what this guy posted in that forum, or what this guy says over here, or what this big time trader wrote in his book, because I'm convinced those big time traders don't know anything either, for the most part. Those guys one thing they have probably is veins of steel and very deep pockets. And if you got deep pockets, you can afford to ride it out wrong until you're right, but not us. We don't have millions of dollars sitting around in an account. At least most of us don't. Most of us, if you're lucky, you got a $50,000 account, and you can't afford to blow that account trying to being wrong until it turns right again. But if you got millions sitting there, you can afford to be wrong for a long time, and eventually you'll be right again. But we can't do that. We got to be precise, almost perfect. We got to be our timing, and that's what's. I mean, I honestly, I've had a lot of real people that come from investment banks come to me because they don't know how to trade. They don't know how to be this precise, and they want to learn to be that precise. And they don't know how, because they were taught to find a trend and buy and hold. And that's how they trade. And that works if you got deep pockets. But if you want to be precise, where you're in it within a few ticks of turns, which is what we try to do, you got to be really good at this. So anyway, that's enough for my soapbox today. I'm going to wrap it up. Hope you had a good trading day. Glad to be back for a couple of days. Still got a lot going on in my life right now with my mother and all, and it's distracting me and taking me away even today. And that we got to make a decision what I'm going to do with my mother by tomorrow. Some tough calls here for me. She's not ready to go home yet, and she's bucking that, so she wants to just go home. And so it's a tough decision for me and my brother to make, for my family. And so y'all, appreciate all the prayers and thoughts and emails and notes and things like that. It's greatly appreciated, but it's a tough time for me right now, especially with the holidays and all, her still being in the hospital. But we got to make a decision by Friday. They'll discharge her on Friday, and she's just not ready to go home yet. So continue to pray for her. I appreciate it. Thanks to everybody. Hope you have a great evening, and we'll be back again to do this tomorrow before we wrap up our week, and we'll talk about the holidays and all for that. But anyway, I'm going to wrap it up. This is Mike with PriceActionTradingSystem.com.